Aloha and welcome to the East Oahu Realty Report, third quarter 2017.
If we look at the big picture, we can see that house prices in the United States rose almost 7% from the second quarter of 2016 to the second quarter of 2017. This represents 6 consecutive years of price appreciation.
The strongest four-quarter gains have been in the Pacific regions, with states like Washington, Oregon, California, and Hawaii among the states with the nation's top appreciation.
Overall, recent house price growth has been significant. As housing markets stabilized after last decade's crisis and began to climb again, quarterly numbers reflect a consistent upward trend for price index over the last 6 years. This extreme growth has been fueled by low interest rates and tight housing inventories. New home sales are below historic levels but are rising faster than house prices, which could help to balance our inventory and demand down the road.
Hawaii was ranked 11th in the nation with over 8% price appreciation after states like number 1 Washington, up by over 12%, and number 2 Colorado with over a 10% increase.
The city and county of Honolulu is up nearly 6% year over year and remains strong in price appreciation. Honolulu is ranked 133rd in the nation after cities like number 1 Mount Vernon, Anacortes, Washington, and number 2 Seattle, Bellevue, Everett, Washington, both up over 14%.
If we look at the nation's financial stress index in the third quarter of 2017, it is at a negative 1.5 points. You can see we are down from the index's highs of nearly 6 points during the last recession, highlighted in red.
From active and new listings to months of supply, the supply indicator levels are mixed. Month supply still remains historically low at 2.5 months.
There were over 2,800 single-family home closings in the first 3 quarters of the year. This is up nearly 5% year over year. Condominiums had a 6% jump to over 4,300 sold units. Over time, we can see the peak and trough pattern that demand follows.
If we overlay months supply on this demand chart, we can see the inverse relationship between supply and demand over the last 3 decades. Currently, supply is low and demand is high.
The effect of this low supply and high demand is likely what is putting upward pressure on median sales price. In the third quarter, prices rose nearly 1% in single family to $760,000 and up to 11% to $425,000 for condominiums. Real estate expert Eddie Flores predicts median price for single family homes could hit $1 million by 2022.
If we compare market velocity and price point on Oahu single family homes, we see it is fairly consistent at the low end of prices at just below 20 days on the market to sell. Once we hit $1.1 to $1.9 million, it nearly doubles to 30, and then at $1.9 million plus, it doubles again to 63 days. The breaking point is at about $1.1 million. Anything below that in single-family homes on average is sold in several weeks. Above that could take months. For condominiums, the break occurs roughly at $475,000.
Days on market is a good measure of market velocity, or how quickly homes are selling. In the third quarter, market velocity for both categories is just under 2 weeks to sell. Market velocity is up about 13% for single families and 5% for condominiums.
In this chart, we can see the amount of real estate loans relative to total bank assets over the last 40 years. This indicates bank exposure to real estate purchases. Too low of a number is negative and too high can indicate a bubble. We are currently at 26%. This is off 9 points from the ratio's high of 35% in the peak of the market in 2006.
The line in the graph represents an index that tracks Hawaii's economic activity. We can see the last 5 U.S. recessions highlighted in gray. Since the spring of 2009, the index has recovered almost 42 points.
Visitor spending was nearly $13 billion through the third quarter. This is up over 7% year over year.
Third quarter visitor days hit nearly 63 million. This was up nearly 5% year over year.
Arrivals through the third quarter grew almost 5% year over year to just over 7 million visitors. This was boosted by growth in arrivals from both air service, up 5%, and cruise ships, up over 23%.
In summary, for the third quarter of 2017, prices were up for both single-family homes and condominiums. Supply remains low. Market velocity is just under 2 weeks to sell, and there is stability in Hawaii's economy.
The neighborhood of the quarter is Ainahaina Kuli'o'o single-family homes. Demand is up. There was a 16% increase to 72 closed sales in the first 3 quarters of the year. Supply has decreased. There was a 3% decrease in new listings to 111. This high demand and low supply through the third quarter may have caused Ainahaina Kuli'o'o single-family homes median price to rise 7%. These numbers earn Ainahaina Kuli'o'o single-family homes the neighborhood of the quarter.
With the help of a proven professional, you can navigate this often confusing and difficult process with ease. When you work with East Oahu Realty, you work with a team of knowledgeable and experienced professionals equipped with special expertise. Thank you for watching, and until next quarter, aloha.